I've just developed a brand new highly profitable trading strategy. This strategy uses a well-known indicator on TradingView combined with another free indicator. In this video, I'm going to explain what this indicator is, how it works, and how impressively the backtesting results are. So let's dive in. The indicator we're discussing is known as QQE mod. To add it to your chart, we're going to open the indicator search bar and type in QQE mod and select this one. Alright, after you've added the indicator to your chart, let's go into the settings and make some adjustments to have the more accurate signals. As I mentioned earlier, we're going to use another free indicator in this strategy. This time, we need to search for the 3 EMA indicator in the search bar of the indicator section. Now click on the gear icon to open the 3 EMA settings panel. Then follow along with me as I adjust the parameters. Alright, now that we have everything we need on the chart, don't forget to hit the like button below the video and let's get over to the trading rules. If you're considering a long trade, the first condition is to make sure the market is in a bullish trend. This means that the 100 moving average should be above the 200 moving average and both should be above the 400 moving average. And also, we want to make sure that the price is trading above all these moving averages. And the second condition is that the first histogram bar of the QQE mod indicator should be above the 0 level. This would be our buy signal, and the corresponding candle would be our buy signal candle. So once all these conditions are met, we can proceed with a long trade. The stop loss should be placed right under one of the moving averages. As for the take profit, we're aiming for a risk to reward ratio of 1 to 1.5. And if you're considering a short trade, the first condition is that to make sure that the market is in a bearish trend. This means that the 100 moving average should be below the 200 moving average, and both should be below the 400 moving average. And you also want to ensure that the price is trading below all these moving averages. And the second condition is that the first histogram bar should be below the zero level. This would be our sell signal, and the corresponding candle would be our sell signal candle. So, once these conditions are met, we can proceed with a short trade. The stop loss should be placed right above one of the moving averages. As for the take profit, we are aiming for a risk-reward ratio of 1 to 1.5. Now, let's examine the backtesting results. Out of 100 trades on the Bitcoin chart using a 15-minute time frame, we had 70 successful trades and 30 unsuccessful ones. This gives us a success rate of 70%. The max number of consecutive losses was 4, which means you could have experienced 4 losses in a row. On the flip side, we had a streak of 6 consecutive wins. That max drawdown was 3.94%. This means we risk 1% of our account per trade to achieve a profit of 1.5%. The strategy resulted in a 109% increase in the account. All the trades took place over approximately 11 weeks. That's wrap up our discussion on this highly profitable trading strategy, and don't forget to check out the recommended video on the screen. This strategy is one of the best on our channel and it's worth trying out.